The investors of Shopify stocks are constantly getting the bad news. S&P Global Market Intelligence has recently reported that Shopify stock has crashed again by about 17.2% this week, which will cause more pain to its investors. As we all know, that everything happens for a reason, and there are also a few reasons behind the dip of Shopify stock, such as the potential acquisition of Deliverr and the proclamation of Amazon products. There are also possibilities that many investors may get nervous with the tech and internet sector in general, as Netflix stock also declined around 40% this week. We also have seen that PayPal and Block are also falling. Hi guys, welcome back to Glory Investing Show, and in today's video we will be doing a detailed analysis of Shopify stock. We will discuss a few important things, such as the plummeting of Shopify stock, how the CEO of Shopify got more power through permanent voting, and how Amazon challenged Shopify through a new announcement. In the end, I will also talk a little about diversification of the Activision board, the reasons behind the dip of Shopify stock. I've already mentioned that there are a few reasons for this crash. First of all, investment bank forecasters dropped the price target on the stock, which may adversely influence the decisions of Shopify investors. They may be thinking now about selling their stock as they're not looking very hopeful for an increase in the near future. Number 1. Acquiring startup Deliverr for $2 billion. The second reason for the dip in Shop is that there are also some rumors around that Shopify is planning to acquire startup Deliverr at a net worth of $2 billion. For those who don't have the knowledge about Deliverr, this startup assists companies that are engaged in selling the products online on Amazon, eBay, Wish, and Shopify. Deliverr assists these companies in improving their delivery time. I would say that Shopify is thinking smartly here because the tech giant was also planning to improve the delivery and fulfillment solutions for its sellers. But it looks like the investors are not really happy with this decision, if the decision of acquisition is real, not a rumor, due to the price tag. Number 2. Amazon announced a new service. The third biggest reason is that Amazon, the giant competitor, announced a new service named Buy with Prime. According to the news report, online sellers who use FBA can now offer the benefits of Amazon Prime. For instance, they can offer free shipping and fast delivery powered by Amazon. And the good thing is that these sellers can use these slogans on their websites too, instead of just using them on the Amazon website. It means that Amazon is fully backing its merchants, which might not be good news for Shopify. However, Amazon is not directly competing with Shopify because the company is just backing up merchants in the fast delivery, etc. But Amazon is not creating a website for its sellers just like Shopify does. Still, this might influence Shopify's fulfillment plans, and the announcement of Amazon can also adversely affect the major portion of Shopify's revenue if the customers pick the option to pay using Buy with Prime. This will impact the business of Shopify, so you will see no surprise in the news about the dipping of Shopify's stock. Here it is important to note that there is also some nervousness in the market after the terrible reported earnings of Netflix this week. This might seem like many techs and internet investors are predicting the losses in the Shopify stock. Now, as I mentioned, a few reasons behind the dipping of Shopify's stock. No one knows the exact reason that dropped this stock the most. In the future, investors and Shopify need to focus on the new announcement of Amazon Buy with Prime. However, no one knows what will be the outcome of this initiative, as we still have to see how many people will adopt the service. Tobi Lütke, the CEO of Shopify, became more powerful after the stock split. In April 2022, the company stated that it was splitting its stock 10-for-1 effective June 28, 2022, although the split of stock is mainly enhanced in the days of fractional share brokerage. It helps with options plans and aids those without access to fractional shares. In the past, the decision to stock split soared the stock. For instance, in 2020, Tesla company made the announcement of its stock split, and after that, it increased more than 80% in the days. However, even after making an announcement of the stock split, Shopify stock is still down around 6%. So what can be the reason behind it? Tesla company made the announcement when it was close to its all-time high, whereas Shopify is down more than 65% from its all-time high. Many investors are asking a question: why the company needs to split the stock when it could split these stocks when it was at an all-time high? Those who are shareholders of the company give their vote during the company's meeting regarding the stock split. This voting is not similar to what we see in a democracy, where every person gets one vote. However, in this voting, each share held counts for one vote, and some shares are even counting more than one vote. For the CEO of the company, his voting power has declined. As Lutke has less power, the outsiders can influence this voting and decisions. The CEO and founder of the company, Toby Lutke, is trying to get permanent voting power, which can make him more powerful. To overcome this issue, the company board has approved a new class of shares, dubbed the Founder Share, which has a variable amount of voting power to get control. The voting power of Lutke would be permanently set at 40%. When the CEO steps away from the company, the class of shares will be retired. If the CEO gets the permanent 40% control over voting, this could be considered a single-point catastrophe. There is no doubt that the founder has led the company successfully and made the company an e-commerce giant, so this is assumed that the CEO will make a smart decision. But the high voting power may not be in the best interest of the business and shareholders in the future. Shopify is focusing on other moves like crypto acceptance after being challenged by Amazon. Activision diversified its board, and Skechers signed Pickball Winners ATVI. The gaming company is adding 2 women to its board, Lulu Cheng, and they will also nominate Carrie Carr in the mid of this year. The company had been in violation of California laws that ordered the company to nominate 6 boards of directors, including at least 3 women. Activision's CEO had been under strong pressure as he allowed sexual harassment in the company. This is not clear yet if the CEO would stay on if Microsoft acquires Activision. However, the price of the share went down since the offer, but it's just a fractional movement down at the moment. On the good side, more women are coming to the Activision Blizzard board. Now, if we talk about Shopify, the stock is falling over 10% in intraday trading before getting some gains. We can see its decline up to 8.1%. As we all know, Amazon is introducing a new service for its merchant, Buy with Prime, and it will be rolled out this year. Shopify has started focusing on some other moves as well, as it is expanding in terms of accepting crypto through Ottawa operations. It means that lesser fees and faster Bitcoin payments can come through on the evolving Lightning Network. The stock is still declining to more than 65% year to date, so it might be an uphill battle as they got out of the pandemic situation. We know that Amazon has really led the conversion rates, so with the move of Shopify, we can see that the company is able to compete with the smartest move of giant Amazon, leaning on to the never-ending fascination about the rage of Skechers brand ambassador, from Kim K's Super Bowl ad years back to Willie Nelson and Martha Stewart. They are in the pickleball arena. This company is planning to put more marketing dollars in, so we're going to get an actual new breakout for financials. That's all for today's video. I hope you really enjoyed it. If you found this video helpful, make sure you smash the like button and share it with your friends. Don't forget to download Moomoo app and get your free stocks with depositing only $1. And while you're there, click to watch one of these 2 videos appearing on your screen right now. I'll see you there. Take care and stay tuned.